Hey Nick, how do I raise money, man? I have this idea, it's huge, I know it's going to be big, but I need money. How do I get backing? What even is an angel investor? Does an angel just like come out of the sky and hand me $1 million? How does this all work? What is venture capital? What does bootstrapping actually mean? What about incubators and accelerators? How do I get my idea in front of people? People who could actually write checks. And maybe the biggest question that people have is, where do I even begin to find these people, and how do I talk to them without sounding like an absolute rookie? These are the questions that I get every single day, whether it's through DMs, calls, at my RIA firm, or people looking to raise capital. And look, I've been on every side of this thing. I have raised money, I have lost deals, I have had investors tell me no 20 different ways, I have sold companies to private equity, and I have helped hundreds of founders raise hundreds of millions of dollars. And look, none of this is BS for me. I have lived it, and I live it every day. So in this video, I'm gonna break down 3 things. Number 1, questions that you must answer before you ever go and try to raise money. And number 2, the different ways to actually raise capital, because there's plenty of them. And number 3, where these investors actually are and how to communicate with them once you find them, because that's crazy important. Before we jump in real quick, hey, make sure you hit subscribe on the channel. I'm building something bigger here, and every week I drop real advice that you can actually use, not just motivational garbage. Hit the bell so you get notified when the next video goes live. So, questions before you ever raise a dime. Number 1, should you even raise money? Not every idea needs outside capital. Some ideas are small and simple, and you can build them yourself, and raising money is a big commitment. Sometimes the best move is just bootstrapping your way until you actually have a proven product. So ask yourself, do I really need money for this, or do I just want to skip the hard work? Question 2, if nobody gave you $1, how would you actually make this work? This tells an investor a lot. If your answer is, it cannot work unless I get money, then that's a huge red flag. Investors want founders who find a way even when capital is tight. Look, when I built one of my companies, I put my entire savings into it before anyone ever wrote me a check. That is what showed investors that I was actually serious. I was all in. I burned all the boats. It was just me. I was ready to go. Question 3, how exactly will the money be used? This is huge. You would be shocked how many people cannot answer this question. If you are asking for $700,000, $2 million, why? What's the breakdown? What's the use of funds? If you want $25,000 for a prototype, know your numbers. Know who builds it, know what it costs. If you cannot respect your own capital plan, then no investor is going to do it. Question 4, who is your ideal investor? Is it a smart money guy or gal? Is it someone who has industry experience? Is it someone who has connections that you need? Are you looking for a private equity partner, a family office, a mentor, an operator? Know what you want before you start asking for money. Question number 5, are you willing to go big and lose some control? Because when you take capital, you take opinions, you take accountability, you take expectations, and you're going to take a boatload of pressure. This is not emotional support money. These are sharks. If someone gives you $1 million, they expect a real return, and they expect a return of their capital. If you want to control everything and answer to nobody, then raising capital probably is not for you. Question 6, can you handle accountability? Look, investors are going to push you hard. They will challenge you. They will ask hard questions. And if you're sensitive or if you're stubborn, these relationships are going to blow up really fast in your face. I've seen investors make founders' life absolutely miserable because the relationship just went sour. So to be honest with yourself about taking capital. Question 7. Have you done real research? I once had someone pitch me a brand new idea, and it took me 5 minutes to even understand what they were saying. When a founder does not understand their own market, I stop listening immediately. Or if it takes too long for me to understand their deal, it's just confusing. But when someone comes to me already knowing who is in the space, what they do, how they position themselves, and why they think their approach wins and is better, that's when someone's going to actually pay attention. So question 8, what makes your idea unique? Not everything needs to be radically different, but there must be some angle. There's got to be something, some positioning, some advantage, some momentum you have that separates you. Question 9, have you done the math? Have you looked at your valuation, your dilution if you're taking capital, your cap tables? Do you know what those even are? Your ownership percentages. Basic math matters. If you come to an investor with sloppy math, they assume you will run your business the same exact way, and they should assume that. Question 10, are you building to sell or are you building to keep it? Look, VCs want exits, family offices want stability, long-term cash flow, and some investors want 7, 5, 10-year exit plans. Others want something you can hold forever, so you need to know who you're reaching out to, know your math, and don't approach the wrong investors. Those are just some questions that you need to start asking yourself before you ever go and raise a single dollar. So let's get into different ways to actually raise money. Option number 1, bootstrapping. This is your own money. This is savings. This is cash, maybe a small line of credit card. It is painful, but it's powerful because you keep control. When I first bootstrapped one of my companies, I put my entire life savings into it, built it, proved it, and eventually then brought it to some strategic investors, including private equity, and that helped me grow faster. Bootstrapping gives you leverage. It gives you leverage later on. Option 2, traditional bank loans or SBA loans. They're slow, they're frustrating, and they usually require strong credit, income history, collateral, and a solid business plan. It is still a path, but not the easiest one, especially today. Option 3 is crowdfunding, like Kickstarter, Indiegogo, GoFundMe. Those work best if you have a physical prototype or a story people want to actually support. And this is how a lot of early stage product companies start to get some real momentum. Option 4 is incubators and accelerators. This gives you some capital. They can give you mentorship, a community, and some structure. It's perfect for young founders or people launching their very first business. They can fast track your early foundation, but be careful because they can take a lot of equity too. Option 5 is angel investors. Warm market angels like friends, family members, or cold market angels like successful people that you don't know yet. Angels typically write $25,000 to $500,000 checks. They want to see that you have skin in the game and that someone close to you actually believes in you. Option 6 is venture capital. This is the big leagues. This is, VC funds. They want big returns. They want fast growth. They want a very coachable CEO and a strong team. They look for 10 times returns. They look at your ability to scale. They look at whether the business can actually become something meaningful. And if you are not chasing a large opportunity, trust me, VCs are not for you, either private equity funds and probably not family offices either. So where do we find these people? Well, number 1, mentors and people that you may already know. Look, the warm introduction is still and will always be the most powerful introduction on the planet to raise capital. Number 2 is angel lists and VC lists. You can search angel investors in Miami and family offices in Florida, VCs invested in real estate tech, whatever is relevant to you. These lists exist everywhere. Number 3 is universities. If you graduated from anywhere, use the network. It's crazy powerful. Alumni tend to take care of other alumni. Number 4 is LinkedIn. This is one of the easiest ways to build relationships with investors if you know how to communicate properly. And most people do not know how to use LinkedIn properly, but if you do, and we teach you how to use LinkedIn properly in all of our programs, it is so powerful. So how do I approach these investors? First off, keep it simple. Keep it respectful. Keep it researched. A great first message sounds something like this. Hey, so-and-so, I saw your interview where you talked about raising capital for blue-collar roll-ups. The part at minute 14 changed how I look about scaling. I'm a 29-year-old founder building a platform in the same space, and I would love to share the idea with you. And that's it, let it go. See what their response is. Open up dialogue. We don't need to send them our decks and our full details. Just start opening up the dialogue. You might not get a response. Follow up again. Follow up once or twice if needed, always with respect. But look, the best introduction though is always someone else introducing you. That warm introduction. That is instant credibility. Look, raising capital can feel like a full-time job because it is. You must be assertive and patient. You must be super aggressive, but yet respectful at the same time. And most importantly, you must be building something or have built something real. Investors chase momentum. They chase founders with conviction. They chase businesses that have real traction and systems and a real plan. I've raised money. I failed at raising money. I've sold 4 different companies, and I have helped hundreds of founders raise hundreds of millions of dollars. And what I can tell you is this: when you build a real business, the right partners will find you. It just happens. Fundraising becomes 10 times easier when you stop begging for capital and start building something investors want to actually be part of. If you want a PDF or you want some information with all of these questions and frameworks, the link is below. Check out capital-unlocked.com. That will help you quite a bit. Look, subscribe, join the community, and share this with someone who needs it. Let's build something real together. See you on the next one.